Thomas, good to see you. Today we are talking day trading, the risks and the rewards. Fueled
Mhm.
by COVID lockdowns and the rise of commission-free brokerages like Robinhood, online trading or day trading has seen a huge jump in the past few years.
Mhm.
Also, now, influencers are peddling courses and video series promising to unlock the secret windfalls to profits. However, according to recent financial studies, almost all day traders lose lots of money,
Mhm.
particularly after accounting for fees and taxes. And I want to show you real quick, Thomas, the a graph of all these new online accounts that were created on E-Trade, which is crazy. So, of
Right.
course, self-directed investing offers potential cost savings and learning opportunities. What are the other advantages?
I would say that's probably the largest advantage is, the amount of people that are actually getting into the markets and learning and getting educated about different stocks and how to buy and trade. You could potentially make some money, but again, there's some volatility that's with that. And I think that it does. It did create a situation in the markets where uh, stocks did go up in value because there was a lot of people jumping into the markets. So overall, though, I would say the biggest advantage is just the amount of education that people are getting from learning how to trade and understanding how markets work.
hmm And these same studies found that only 1 to 3% of day traders consistently earn above market returns. Why is that?
That's huge, right? So that means that 98, 97, 98% of people are getting into the market, actively trading or losing.
hmm
And one of the biggest reasons for that is these are large institutions with trillions of dollars in the markets. They have the best information, they have the best technology, to buy and sell stocks. The average investor that's sitting in his basement or, at his, on break at work, is not studying the markets consistently as these institutions are doing. So they're limited in their information, they're limited in their technology to buy and trade with a smart perspective, if you will.
hmm So, if somebody is interested in opening an online account, you have a few considerations you'd like them to walk through first. And the
Mhm.
first is that you need to consider your approach and expectations.
Yeah, I wouldn't go in, thinking that you're going to get rich quick. That's kind of like going to the casino, going to Vegas, and throwing all your money on 6 and 8. So I wouldn't think I wouldn't have the perspective of saying that, hey, I'm going to make millions of dollars in the stock market. And then obviously you want to consider, your risk. This stuff is risky. Everything doesn't work out. A lot of friends that I know that have played in the markets, their portfolios were down because they weren't properly diversified. So yeah, the second deal is the risk tolerance, and when you're thinking about, going and playing the market, you can, buy concentrated positions, one or two, but typically your risk is you're very risky. You're pretty aggressive when you're thinking about day trading.
Right. And then the third consideration that you wanted people to consider, of course, are two obvious risks. And the first one is known as behavioral finance, Thomas. So, what does that mean exactly?
Yeah, it's basically a mindset that there's a cycle that happens when you're looking at buying positions in the market. You go through that optimism phase. You're happy, you're getting in the market, euphoria, and then when your account starts to be incredibly volatile, then there's some anxiety and also there might be some issues where there may be some depression that might set in because you're losing your money. So a lot of people trade on their emotions, which I think is can be very, very detrimental to their overall portfolio. They sell when they shouldn't, they buy when they shouldn't, and that's obviously a part of how we think. So I think it's important, to have an overall long-term strategy when you're thinking about trading, because if you're trading on emotions, you're going to lose.
Mhm.
Mhm.
And then the second risk that you wanted to address, tax implications. These
Mhm.
day traders may be creating taxable events that they don't even know about.
Yeah, that's huge. Nobody really thinks about that,
Yeah.
right? When you have an asset and it's up in value, you bought it at a low value. There's a gain there, and Uncle Sam wants a piece of that. So you got to understand that if you're buying and selling consistently and doing it a lot, there's going to be a massive tax bill at the end of the year. So be mindful of that.
Mhm. And Thomas, if somebody does want to speak with you about opening an account or maybe setting up some guardrails if they're interested in it, how can they get a hold of you?
For sure. A few different ways. You can obviously reach out to me through my website, martinheritagegroupllc.com. You can shoot me an email at info@martinheritagegroupllc.com. You can also give me a call, 651-503-6064. And then I'm on all social media platforms at Martin Heritage Group, LLC.
All right. Thomas, thank you.
Thank you.